Welcome, I'm Ernie Goss, Professor of Economics and McAllister Chair here at Creighton University in beautiful downtown Omaha, Nebraska. Here I am on the first business day of December, reporting on business conditions for the Mid-America region. That's the region stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south. Here we are reporting on what happened for the month of November according to these purchasing managers, supply managers. Of course, these are women and men that make purchasing decisions for their company. Now, the theory is that this is a leading economic indicator. Well, it's either leading by a lot or it's not doing its job very well lately. I'll just say that right now. So, what does it say for the month of November? Well, the overall index was below growth neutral again. Now, the index ranges between 0 and 100. 50 is growth neutral, so anything below 50 is, of course, growth negative, and that's what we got again for November. Same as October, same as September, and same as August. So 4 straight months of not good numbers. And again, it hasn't spilled over into the broader economy, at least just yet. The index fell to 40.7 from 41.9, and it's the lowest we've seen since the recession. The employment number sank to 41.7 from 42.3. And we're seeing the area, that's in 9 states, losing jobs to the tune of about 1.1% of manufacturing jobs were lost over the last year. Now, how does that compare to the U.S.? U.S. is about half that. In other words, the U.S. and the region are both losing manufacturing jobs. The Mid-America region is just losing them a lot faster. Now, here I'll bring up a chart showing you, comparing for you, the index for Mid-America, that number is in Creighton blue there. In red, that would be the U.S. number. And as you see, they're both looking not very good. The U.S. number will come out later on this morning. The last month was 50.1, so just ever so slightly above growth neutral. And as you see there, our index is just not good. It's been pointing to slow to no growth to negative growth. But again, it hasn't spilled over into the broader economy just yet. Inflationary pressures slumped to 42.6. That would be our inflation gauge. So not much inflationary pressures, but this is at the wholesale level now. Exports negative again. We ask about the Federal Reserve rate hike, which I expect in December. 18% expect only 18% expect a negative impact from the rate hike. Of course, that means 82% expect either no impact or a positive impact. That's what I expect as well. So all in all, it was not a good report, folks. Sorry about that. Now, what to watch for in the next month? Okay, jobs report comes out this Friday. Now that's December the 4th. That's for the month of November. Check that number out. If it's around 200,000, which I expect it to be, that's going to seal the deal for the rate hike. I think the deal's already sealed. But anyway, that would seal it for those in the press. Purchasing management indices, that's the numbers I just showed you. Those are important. On those come out again, the U.S. number comes out later on this morning for November. Now on January the 4th, we'll release our number for Mid-America. The U.S. number will come out just after ours does. Keep an eye on the core CPI. Now that's the consumer price index that subtracts out food and energy. And that's growing at about year over year, 1.9%. Now that's just only slightly below the Fed's target. We're hearing from the press reported no inflation. It is rising, so that's something to keep an eye on. Now, what are the risks? The risks are that the Federal Reserve conveys uncertainty, and that's what they've been conveying, unfortunately. I think that will continue. They seem to not be that confident in that they know what's going on in the economy. Well, the economy is two points. Manufacturing is losing activity, shedding jobs, but the rest of the economy, outside of energy and farming, doing pretty well. So the risks are that they convey uncertainty at that meeting. Also inflation, keep an eye on the inflation. Now how do you do that? Go to finance.yahoo.com and look at the 10-year Treasury yield, that is. It's between 2.2 and 2.3. If that begins ticking up to 2.6, 2.7, you know the market, investors globally are pricing in some inflation, so keep an eye on that. Finally, the value of the dollar. the value of the dollar is just strengthened, strengthened, strengthened. And that slows manufacturing, slows farming as well, slows energy as well, and that's what we're seeing. Those are the three weak areas, and that's what we're capturing in our survey. So keep an eye on that value of the dollar. I expect it to strengthen even more. Against the euro, it's up to a buck, it's $1.05. It was $1.06, so that indicates an increasing value of the dollar. That's going to be important. Well, that's it for the month of November. Here I am in December reporting on our results for the month of November. Tune in, come in, view us on January the 4th when we will report on the findings for the month of December. The results aren't good. All I can tell you is manufacturing, farming, and energy are very weak. We're picking it up in our survey. Has not spilled over into the broader economy. A rate hike is coming. So that's to sum it up. So until we meet again on January the 4th, may your economic cup runneth over.